Ever wondered how the world's savviest investors turn pocket change into fortunes? Buckle up because we're about to hop on the Value Investing Express. I know, it might sound about as exciting as watching paint dry, but trust me, this train ride is going to blow your mind. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. Picture this. While everyone else is chasing the latest flashy stock, you are quietly building an empire of hidden gems. Intrigued? You should be. We are talking about the strategy that turned ordinary folks into Wall Street legends. Remember those kids in school who were always one step ahead? Well, meet the financial world's ultimate nerds. Benjamin Graham, Charlie Munger, and the one and only Warren Buffett. These guys aren't just rich, they're filthy rich, and they did it by being, well, kinda boring. But here's the kicker. Their boring method is actually the investment world's version of a treasure hunt. No eye patches or parrots are required though. Just a keen eye for undervalued stocks. Curious about how you can join this elite club of money-making masterminds? Stick around because we're about to spill the beans on the secret sauce that'll have you swimming in cash like Scrooge McDuck. Trust me, by the end of this video, you'll be itching to unleash your inner value investor. Let's dive in and get rich, shall we? Level 1. The basics of value investing. Think you need $1 million vocabulary to invest like Warren Buffett? You don't really need to. Let's learn the basics first. So, what is value investing? Picture this. You're at your favorite thrift store, hunting for hidden gems. Value investing is essentially the stock market's thrift shopping. You are looking for stocks that are being sold cheaper than they're worth, like the diamond-encrusted shoes buried under a pile of old sneakers. The goal is here to buy these stock gems at a bargain and wait for their value to shine through. Now, let's talk about identifying assets. What makes an asset worthy of your attention? You're not looking for any old rusty toaster. You're after assets that can generate cash flow, like shares in a solid company, real estate, or even loans. Some value investors go for the really funky stuff. Remember Seth Klarman? He invested in claims against Bernie Madoff's scandalous Ponzi scheme. Talk about turning lemons into gold-plated lemonade. The next golden rule is insisting on getting a bargain price. You can't just throw money at the first shiny object you see. Oh no, you must be a frugal treasure hunter. You're not a swashbuckling pirate out to plunder. You're a discerning shopaholic, waiting for that perfect 50% off everything sale. This is a game of patience, kind of like waiting for the new season of your favorite TV show to drop. Painful, but oh so rewarding in the end. Level 2. Digging deeper. Now let's get deeper. Let us uncover the secrets hidden in plain sight. Those juicy financial statements that tell the real story behind a company. Think of these statements as a company's report card. Would you trust your money with a business that can't tell its assets from its liabilities? Didn't think so. We're talking balance sheets, income statements, and cash flow statements. The holy trinity of financial health. Here's a pro tip. Look for companies with a treasure trove of assets, minimal debt, and a steady stream of revenue. It's like finding a straight-A student in a sea of slackers. But wait, there's more. Let us talk about those mysterious valuation multiples. These are like the secret codes of the stock market. Ever heard of PE, PB, or PS ratios? They are not alphabet soup. They are your crystal ball into a stock's true value. For instance, a low PE ratio might scream, bargain. Or it could be whispering, run for the hills. It's all about context, folks. You've got to be as discerning as an art critic telling a Picasso from a preschooler's finger painting. And now, drumroll please. Let's unveil the crown jewel of value investing, intrinsic value. No, it's not some mystical concept. It's the real deal, the true worth of an asset beyond all the market hype and hysteria. Calculating intrinsic value is like being a financial fortune teller. You're peering into the future, estimating cash flows, and bringing them back to today's terms. It's your way of saying, cut the nonsense. What's this investment really going to be worth down the road? Level 3. Advanced analysis. Now, let's get even deeper into the advanced techniques that separate the investing pros from the amateurs. This is where things get really interesting. First up, let's talk about crystal ball gazing, or as we call it in the biz, estimating future growth. Wouldn't it be nice if companies came with a fortune teller? Unfortunately, we've got to rely on our own smarts here. When you're trying to predict a company's future, you need to think like a detective. Are they cooking up some hot new products? Eyeing juicy new markets? Maybe they're sitting on a game-changing technology. It's like trying to guess the plot twist in your favorite TV show. Exciting, but tricky. Just remember, potential doesn't always equal profit. Don't get starry-eyed over promises. Keep those feet on the ground while your investments reach for the sky. Next up, let's dive into the lifeblood of any company. Cash flow. Think of it as the pulse of a business. A company without solid cash flow is like a car without gas. It might look pretty, but it ain't going anywhere. Positive cash flow? That's music to an investor's ears. It means the company can pay its bills, grow its business, and maybe even toss some dividends your way. So keep your eyes on that cash. It's the surest sign of a healthy investment. And now, for my favorite part, knowing when to play the long game. Remember that Kenny Rogers song, The Gambler? Well, it applies to investing too. Sometimes you've got to know when to hold 'em. You might snag a stock at a bargain price, but it doesn't skyrocket overnight. Don't panic. Good things come to those who wait. It might take months, even years for the market to wake up and smell the coffee. Level 4, mastering patience and diversification. Ready to test your patience? Let's see. Value investing isn't about instant noodle-style returns. It's more like slow cooking a gourmet meal. You find that perfect ingredient, aka an undervalued stock, throw it in the pot, and let it simmer. Sure, watching your investments grow can be about as exciting as watching grass grow. But oh boy, the feast at the end can be worth the wait. Now, let's talk about resisting temptation. You know that feeling when you're eyeing a pair of limited edition sneakers, but the price tag makes you wince? That's how you should feel about overpriced stocks. Sometimes, you've got to let that cart sit empty until that price drops to something more reasonable. Your wallet and your future self will thank you. But here's where it gets fun. Diversifying your portfolio. Imagine you're a kid in a candy store, but instead of sugar loading on just chocolate, you're picking a mix of treats. In the investing world, this means spreading your money across different industries and sectors. It's like making the perfect financial sandwich. You need a variety of flavors to keep things interesting and less risky. And finally, let's channel our inner Indiana Jones and hunt for those elusive market inefficiencies. Sometimes, the market gets it wrong, pricing an asset way below its true value. That's your cue to swoop in like a financial superhero and snag that bargain. These inefficiencies can pop up for all sorts of reasons. Overreactions to company news, neglected sectors, or just plain old market weirdness. Spotting these opportunities is like finding hidden treasure, minus the booby traps and rolling boulders. Level 5, becoming a value guru. And the last level, finally. By now, you're probably either pumped with the excitement of unlocking financial wisdom, or not. The last level is where the magic happens. Picture yourself as a financial alchemist, ready to craft your own unique investment elixir. This isn't about mimicking Warren Buffett's secret sauce. It is about concocting your own special brew that perfectly matches your financial taste buds and risk appetite. Are you the type who gets a thrill from high-stakes investments? Or do you prefer the slow and steady approach? Your strategy should be as unique as your fingerprint, tailored to your goals and comfort level. It's like creating your own signature dish in the kitchen of wealth building. Now, let's sprinkle in some inspiration from the Investing Hall of Fame. Think of legends like Benjamin Graham and Charlie Munger as the Jedi Masters of finance. These guys weren't just following the force, they were bending it to their will. Study their moves and dissect their decisions. But remember, you're not trying to become their clone. You are aiming to be the next evolution. The Luke Skywalker to their Obi-Wan, if you will. Finally, let's talk about rolling with the punches. The market is like a wild roller coaster. One day, you're climbing to dizzying heights, and the next, you're plummeting at breakneck speed. Your job? Be the cool cucumber who can enjoy the ride without losing their lunch. And there you have it. So you've unlocked the secrets of value investing. Now, you're no longer just a passenger on the stock market train. You are the conductor with a map to hidden treasures. This isn't a get-rich-quick scheme. This journey might require some patience. Value investing isn't about instant gratification. It's about slow and steady growth. But like a fine wine, the rewards only get better with time. Thank you so much for watching. Be sure to like this video and hit the subscribe button and notification bell so you don't miss out on our next videos.